I'm about to drop a 6-step masterclass on technical analysis for meme coins that'll level up your trading game. From spotting narratives to nailing those perfect entries with things like support, resistance, and Fibonacci, this masterclass has it all. Whether you're chasing 5x or 50x's, we've been printing back to back to back to back with what I'm about to show you. So stick with me to learn how to ride the meme coin wave like a professional. Let's get this back. Technical analysis on meme coins. This is basically a 6-step process that I've created in depth, every single thing that you need to know and tying it all together. Now, the first thing that a lot of people ask when it comes to meme coins is this: do meme coin charts actually respect TA, as in technical analysis? Now, in short, yes, it does. But there needs to be volume and there needs to be attention. Attention comes first, narratives comes first, TA second. So what you want to do is you want to look at coins that already migrated. Now, this is on Axiom, right? And that's the first step that I usually teach. On Axiom, forget new pairs, forget final stretch. That's advanced. And even in these market conditions, you're going to make way more money catching 1 mil to 10 mil plays for 5 to 10x, even 2-3x's playing off of the technicals, than trying to catch sub 50k market cap and hold it all the way to 500k. You're gonna get rinsed way more. Now on Axiom, you're gonna head over to migrated and look at what's been holding up for the day, and you're just gonna keep it on a watch list. Now after that, I usually go on deck screener. Axiom is just where I place my trades. Best fills, Axiom is where you're gonna lock in. But the way most people are teaching is only trading and scanning on Axiom. That's what most people are teaching you. Now, that's okay. You can find crazy runners that way. But the likelihood that you're gonna hold for, 1000x and all of these things, like, those are all cool. You guys see the scans in Rage Pro. We have 1000x's, 50x's, 100x's, 20x's back to back to back. But the reality is, most people, even myself, if I call 1000x, I might have probably gotten a 20x from it at most. And even that's crazy, but even still, if I call it 20x, I might have gotten a 3-4x from it, 5x maybe. But it's not all the time where you're gonna have a crazy hold and hold it all the way up to those levels. That's not smart, first of all, because if you try to be a moon boy for every single coin, you're just gonna lose. You got to know when to get in, when to get out, have a plan. That's most important. What you guys want to do is look at coins that already migrated, held over 1 million market cap after like 48 hours. And you could do 500 to 1 million, but 1 million ideally. Now, where there is high volume and price action, technicals will be respected, and data. So what I mean by that is, in the first 24 hours, you're not going to have enough data to do technical analysis. That's where people make fun of meme coiners doing technical analysis on sub 50k shitters. You're doing technical analysis in new pairs or final stretch, you're gonna get rinsed. For the most part, it does always work. Technical analysis is always there, but there's so many bundles. There's like, once a bundle gets cleared, it's ripping through all your support, for example. But once a coin is holding up at 1 million, it's been out for at least a day or two, all those bundles are already out, the fake outs already out, there's no PvP coins, like all of that risk, 80% of the risk is already out the window. At that point, it's just, is this a strong narrative, strong community? Can I hold? Find a good dip, and that's where you're gonna take action. So again, narrative first, technical analysis second. Now, when I say narrative, what are you looking for? What is the meta? You could go on Axiom and just look at the migrated coins. If you see a lot of AI coins, the meta's AI. If you see a lot of dog coins, the meta's dogs. If you see a lot of bags coins or certain eco, right? Because lately we have this meta of launch pads having this war. There's bonk, there's pump fund, there's bags that's been running up lately, there's the belief ecosystem. So there's all of these launch pads, and every once in a while the meta shifts to one launch pad lately. You'll see traders only want to trade pump fund tokens one day, and the next day is bonk tokens and things of that nature. One way that I look at that is I usually go on Pro, Jupiter, launch pads, and you can get an idea of the market temperature here. It's also on Axiom Pro, but this is just more in depth. You see the fees generated, everything. You see bonk just today kind of doubled in market share. Pump is still obviously on top, but then we got bags, a lot of bags plays in the group lately. Jupiter Studio, Believe, getting some action lately. So these are the things that you're going to see. Once you have an idea of the meta, Now you could go find bottom charts and do some technical analysis. Now I usually go on deck screener as well. Axiom is just to get a close, in-depth feel of what's happening in the markets. You're looking at Twitter, you're looking at the Telegram groups, you're looking in Raise Pro. We're always talking about metas and what to look at, and then you have to go in there yourself and find some coins to have on your watch list as well. So I do that on deck screener. I keep a nice watch list. All these coins are coins that I've had strong convictions in for a while, but even just on deck screener main page, for the most part, when I'm just analyzing what's going on, no filters, just going through, seeing what's running, keep it on a watch list, and then I start running technical analysis, top-down analysis on it. So this is what you're gonna do. First thing you need to understand is support and resistance. Now, support and resistance are the key levels. You can literally take what I'm about to teach you on support and resistance and automatically increase your win rate just with support and resistance. These are key levels. Support is the floor and resistance is the ceiling. Now, I want you guys to understand when you're doing technical analysis, less is more. So we're gonna do technical analysis on a coin that I've actually been talking about. Flacco's been talking about this in Pro for a while. I was talking about this in the inner circle just today and it played out beautifully. This is Corey. Okay, now Corey is one of the main runners on Bonk, so you got to understand the narrative. This is a Bonk play, and it's one of the biggest, highest market cap runners, organic runners on Bonk, and it's a cute dog, viral on TikTok. They've been running this up, supporting the token. It's been a lot of noise around it. So this was a dip, a bottom chart that we were looking to play, and we've been talking about this for like the past 2 weeks already. Since it hit its high, we've been looking for the lows, and we called it beautifully. So what I'm gonna do is I'm gonna erase everything here and show you top-down analysis from the top. So when it comes to support and resistance, now you guys got to understand the reason why we're looking for data on charts and we're not trying to chart it up the first day is because there's no data. There's not enough candles. Technical analysis works a lot better on a higher time frame. On the higher time frame is where technical analysis shines. That's where it's the strongest. So usually I'm on a 4-hour to an hour time frame doing my main technical analysis. Now you can see here on the 4-hour, there's so much data that we could go through and you can hit on the main points. Now, for the most part, what you guys want to do is you want to look for multiple rejections when it comes to support and resistance. Again, support is the floor, resistance is the ceiling. So what I'll do here is I'll go ahead and I'll click a horizontal line, and this is where price is, 30 million. You want to stay closer to where price is. Now, you can see here, that's a support area. Look at the floor here, strong floor. Look at how many times it rejected. Okay, and then when it finally rejected, what happened? The support became resistance. So this is a ceiling now. It was a ceiling, rejected, came here, rejected, it came here, rejected, and now it finally broke. Okay, and that's one of them. Now this is another ceiling. Now notice I'm putting the line here to where it touches the most. Again, multiple rejections. I could just put it up here if there was no more information here, but now we have a little bit more information. You see, this is a stronger area of resistance. And if you look, I'm looking here, guys, but if you look closely, this was also a previous floor. This was support and became resistance over here. Where's the next area of support and resistance? It would be here, right? It was support here, it was resistance here, and it actually came and wicked over to this level just today. Where's another level of support and resistance? Here. You see, it was a level of resistance. It was a level of support. It broke through, faked out, then came up. Okay, and then look at support. Look how many times it rejected in these levels. That was a strong area of support and resistance. So these are the key levels that you're looking for, and you don't need 1,000 lines. The ones closest to price are the ones that are more relevant. So you want to use the zones in these levels as well. It's not always going to be a very specific price. Like if you see here, we look at market cap for the most part for memes since they're so low in price. If I look at the price, you know, they're very specific prices, but I like to look at market cap, but it's not going to be one specific market cap anyway, or price, same thing. It's not going to be one specific number. A lot of times it is going to be a zone. So usually when it hits that general zone, it's not going to hit off your support resistance perfectly. As you see here, this is a resistance zone, right? So support and resistance, you see a lot of times we use the lines, but we also use zones because it's not always going to be an exact area. Because when you go in on the smaller time frames, you'll see
that it plays within that whole zone. It's not, you know, it's a lot more noise. You'll see like it's a lot of candles in that zone, and that's what you're paying attention to. So on the higher time frame, you know that is a strong area of support and resistance, and you can go down to lower time frames and zone in on the price that you're on now to get more precise entries. But the higher level time frames is where you're gonna have the more precise technical analysis to go off of. A 4-hour level of support and resistance is gonna be stronger than a 15-minute level of support and resistance, for example, or a 5-minute support and resistance. So those are the things that you're looking at, and what you guys want to do is you want to enter at key levels with candlestick reversal patterns. Now, I'm not going to go too deep into that. You guys can go ahead, take a screenshot of this, or just look up candlestick reversals. It's pretty basic stuff, but you know, you'll have like things like a doji. You'll have things like bullish engulfing or bearish engulfing candle, evening stars. So these are things that you're going to be looking for on top of just support and resistance. If you look down here, maybe at the bottom here, you'll see on the lower time frames things that confirm your bias. You see a bullish engulfing. It engulfed all these bears. Bullish engulfing. It's just engulfing candles. Came back down, retested, boom, went crazy, right? So it's not only support and resistance, it's a confluence of a candlestick pattern. And you see that here. It came down, touched on the higher time frame, right? On the lower time frame, it looked like it broke, but on the higher time frame, you see it closed, but and then it immediately had a bullish engulfing candle. Even if you missed it, you could have got back down on the retest, entered, boom, in profit, just off of support and resistance. But the idea is you want to find confluence in your technical analysis. You want to find confluence. So what does that mean? When multiple indicators give you an entry, not just one indicator. Support and resistance is very strong. You can up your win rate just off of support and resistance. But if you want to have an ideal entry and conviction in your play, you want to find some level of confluence. Obviously in the narrative, community going up, volume, strong, things of that nature, but also just in technicals. And then the only time you exit is if key levels break. Okay, now if these key levels were to break, fully break, right? Because we were talking about buying in VCs, we talked about it with Flacco, we talked about these levels, right? Shout out Flacco, because he kept bringing up Corey. That's what made me look at it. I brought it up in the inner circle. I talked about these levels multiple times. The only way this would have been invalidated is if it broke, and let's say it came back, it'll probably retest and find a new floor. And that's where you could just exit your position, cut it, maybe a small loss, or maybe you could just break even when it comes back to retest, and then you just buy in at the new floor that presents itself. That's all you're doing, and you want to be consistent in that, because if you're just a moon boy, or if you don't have enough conviction in the trade, you're gonna psych yourself out, and when it finds a new floor, you might just exit for a loss, and then it flies up, and maybe you were right all along. But you know, sometimes you could just cut a loss and find a new floor, then enter on that if you still have conviction at the new floor, because maybe there could be a reason. Again, you always want to look at the narrative. Does the narrative still hold? Does the thesis still hold? Those are the most important things. That's support and resistance. Very basic. Market structure, even easier. So higher highs and higher lows is an uptrend. Lower highs and lower lows is a downtrend. No swings is sideways, which is indecision or accumulation phases. And basically what you want to know is that the trend is your friend, right? So for example, this is what you call an uptrend. Higher high, higher low. Higher high, higher low. Higher high, higher low. Higher high, higher low. Higher high. Do you see that? This is a swing low. This is a swing high. Now notice it dipped, but it didn't break the previous low. So it's still in an uptrend. The structure is still bullish until it's invalidated and this goes lower. Okay, on the higher time frame, it's easier to see. If I go on the lower time frame, it's going to be a lot more noise, and that's why we're looking for higher time frames, because you get a clearer picture on a long enough time frame. So and then you see, look, it went to a new swing high, came all the way up here, right? It broke this previous high, which is bullish, and it came back down and it respected this higher low. Then it made another swing high, then a higher low up here, then it made another higher high and this is the all-time high, close to 60 mil. Then what happened? Right here, this level of support got broken and the uptrend got invalidated. Now what does that mean? Now this is a downtrend. The structure changed. This broke, the structure changed. On a high time frame, that's extremely bearish. Now usually what happens, it'll come back up. The market moves in waves, right? So usually, even if you're in a trade, for the most part, you guys know, if you trade with me in VC and stuff like that, I usually, I won't take a loss at the bottom. Even if I'm in a loss, it usually always comes back to retest, because it's going to make a higher low anyways. I'll wait for the higher low, then I'll get out And then maybe when it bottoms, we'll look for entries. So that's what we were waiting for. Once we saw Corey go down like this, we knew it was on a downtrend. And this is what made us want to look for Corey for entries. And I remember even at Corey, this was my initial support zone. I saw this level and I said, bro, this is where we're gonna take some entries. This is where we took entries. We was up a good amount, all right, maybe like 60%, whatever the case was. But then they came back down, retested, came back down, broke. So now what do you do in a situation like this? Once it breaks and retests, okay, you can get out, wait for the bottom to form. Then when this happened, this was the ideal entry, because not only was it support, and we'll go over this in the next one, but there was also an order block, or actually the next one, because we'll go over fibs as well. So we saw extreme confluence in this area, and this is what gave us bullish entries, or positions with convictions. That's what structure is. So you see it here, just to reiterate: lower low, higher low, lower low, higher low. This one, look, it went lower, lower low, higher low. Okay, had a little bit of indecision, made the lower low, the lowest low. This is where respected. So what happens now? What do we have here? Sideways movement, accumulation. That's what we're looking for. Accumulation is usually where the channel is going to break out. It's either going to break down or it's going to break up. Meme coins, we're trading spots, so we're not shorting positions and things of that nature. We're only looking for entries for bullish signals. So here was a pretty good area. If you got in at this low, this was a pretty good risk to reward trade, because even here it was 23 million market cap. You could easily go for a 2x, even 3x back to its all-time high. That's a good risk to reward. At the bottom, you're not risking much, because if it breaks, okay, it invalidates. At worst, you break even, cut it at small loss. If you still believe in the trade later, because it broke the wrong way, it broke out of the channel downwards. Now, what are you looking for here? You're looking for a bounce. You want it to respect the support level, okay? And you want it to break out this way. So now you're looking for confluence. You're looking for bullish indicators. Who's still talking about it? Is it still relevant? Are there more catalysts? I was talking about this all week in Rage. We talked about Pump has all the mind share. Bonk is not going to go down sad like this. The market is just heating up. There are billions of dollars to be made. You think they're going to let their top tokens just die off like that? Absolutely not. So I knew this was a bullish area for me, right? To take some positions and lock in. Eventually, we broke out of the channel, and that's what, now we're back into an uptrend. So it finally went from moving sideways to, I would say, higher low, higher high. It should, for the most part, respect this level of support, ideally, and then move on and keep going into its bullish continuation. So that's what you're looking for with market structure, okay? And then these are examples of breaker structures, which we just showed you. Higher high, higher low, breaker structure, you know, broke the previous high for a higher high, okay? And then this is the market shift, and you see it exactly happen just like this with Corey. Once it broke the previous higher low, it went into a downtrend. And now it is finally back into an uptrend. And if you were watching, and if you were paying attention, right, to the higher market cap plays, you could have easily already been up 2x. We call this literally all week at these levels. It's already a 2x play. With size, on a conviction play like this, it's easy to do off of technicals. Very easy to do off of technicals. So then what's next? Fibonacci. You guys hear this a lot, Fibonacci. These are my settings. Go ahead, screenshot that. This is going to be important. You could copy those settings, all right? And it's very simple. You're looking for key retracement levels, which are basically just discounts in the market. Stop top blasting. Wait for the plays to come to you, and you will win a lot more and lose a lot less, because even your losses are going to be minor because you're not buying at the top. If you're already buying at a discount, even if it dumps, you're losing way less than, you know, most people who just buy tops and chase green candles. You have to play it safer than that. You have to be as risk adverse as possible. That's all we do as traders. We mitigate risk. You want to mitigate risk. The best traders mitigate risk the best. So Fibonacci is how you find those discounts. All you do is draw from swing high to swing low. Swing low to swing high. Now, what I found, and I've taught this many times, the golden Fibonacci ratio is the 61 level. What I found is the golden pocket in memes is 61 to 70, the 78 level. 78 level is my favorite because memes are so volatile that it usually goes all the way down to 78 from what I've seen. Unless it's really like in a moment of like super high momentum like this was like a short little retrace. But for the most part, from swing low to swing high, you're going to see that. So I'll go ahead, swing low to swing high, wick to wick. I like for most of the wicks to touch, by the way. And then you're going to find the key areas where it retraces. So you see even here, 78.6 is where it respected. Swing low to swing high. And again, you're looking at zones and you're finding where the confluence lines up. If you look 78.6, this is the golden pocket for me. 78.6 is this level. And again, it's not going to be an exact price, right? Because the price is literally right here, 18 mil market cap. Is price going to just follow fibs like by the T? Yes, but in zones. So usually you'll draw like a zone area of where you see the fibs, right? You'll see in this area, this is a strong level of retracement. And what is also there? A strong level of support. What is also there? Sideways movement, indecision. It's doing a double bottom formation. It's respecting the structure. Like it's no longer on a downtrend, it's moving sideways. So these are a few indicators telling you this is a good high potential for a buy. This is an extreme discount from the highs, right? Because a lot of people were wishing that they bought at these levels when it first hit 50 mil market cap, 60 mil market cap. Now it's at those levels. This is where you have to execute. You can't be scared, right? When everybody's fearful, that's when you buy. When everybody's greedy and euphoric, that's when you sell. So this is a key area here. Okay, now what do the other numbers mean? If you look, the negative 38.2 is usually a good first take profit along at 61.8. And if you really want to hold it for the long term, 161. Those are take profit levels. But even for a play like this, if you already got in on a deep discount, we've been talking about this area. If you bought anywhere between this channel, you're already up 2x, right? If you're in Raise Pro, you've been locked in, you're following the calls, and you're doing your own due diligence, you got some conviction in the trade, you're already up a good amount. Now, usually the first take profit on a coin like this, where you got a deep discount, is going to be the previous high, because that's where a lot of people are going to be selling anyway. So you'll look at it from here. This will be a good first take profit always, the previous high. Outside of your own rules, right? Take your initials, do the whole thing, protect your port. But, once it goes to the previous high, anywhere, 50, 60 mil, go ahead, take some more P, trim, okay? Set another take profit at 38.2, set another take profit at 61. You're already in the money. So that's how you're going to take advantage of Fibonacci. And it's just another indicator to add on. You don't want to get analysis paralysis, but these are the things that you're looking for. Then there's order blocks. Now, a lot of people think order blocks is like so advanced and all this stuff. It's not scary at all. I'm literally going to break it down to you right now, the simplest anybody has ever broken down to you in your life. Order blocks are areas where there's an astounding amount of limit orders, causing large reactions in the market. When price reaches these areas, this is where smart money buys in, and this is usually where you have like the crazy God candle a lot of times. It creates an imbalance in the market. So basically, before I show you this, or I'll show you this. So the market is moving this way, like let's say it's moving down and you're looking for a buy, and let's say it just goes up crazy, right? And then from the previous wick to the candles after's wick, there's going to be a gap. And these are just orders that literally the market is just going to come back to like a magnet. No matter how high it goes, the market usually always comes back to the order block. And smart money is always looking to buy in at those levels. Whilst dumb money is just chasing the green candles, and they're all going to get dumped on, and it's going to create a moment where if you're patient, you'll get a perfect ideal entry. And you see that in Corey as well. This was one of the things that I saw in Corey where we were just like, bro, this looks beautiful. If you look, this is what an order block looks like. The market did a nice little fake out. It went on a higher low, came up. It created kind of like a fake lower low, like a fake out. And then the market went crazy. This candle right here is the full order block. This candle right here, all the way up to the next wick, is the order block. What you'll usually see is the market will come back. The market will always come back to that order block. Look at that. Boom. A little bit more precise. I think it's like a little bit lower, but whatever. Beautiful order block. Now we see 3 confluences that led to this buy. There's a strong order block, and it went so high. I promise you, most people were like, it's never going back down there to 15 mil from 60 mil. That's called euphoria. That's called FOMO. You get scared. You think you lost your entry. It's gone forever. The market always is going to balance itself back out. What goes up must come down. The more you realize that, the more you start to separate yourself from the masses. Observe the masses and do the opposite. The masses are broke. The masses lose money when it comes to trading. The masses will never turn memes into a profit. Not you though, because you observe the masses and you do the opposite. You respect these levels, then you have a golden entry. Now we have 3 things, 3 indicators. And not only just the switch in meta and all of these things, because we knew bonk wasn't going to go down sad like that. But it went from swing low to swing high. Okay, we drew the fibs. We saw this is also 78 golden pocket. From 61.8 here to 78 here. This was a golden pocket. Okay, it had the order block right here, touched boom, and it's on support with a few bounces. Now we had a change of structure. It's fully bullish now. Now it's just, let's see what happens. Maybe if you're lucky, things come back down into an entry area. You get an entry, cool. But for the most part, it's very much likely that it could respect these levels and just continue on to its new structure. So that's what makes an order block an order block. Now, if you see that price escape, but a wick came back down and touched the order block already, then it's invalidated. It usually only has to touch once. Once it touches that order block, that's it. But as long as the gap is there, the gap is what validates it. And you gotta train your eyes to see that. But for me, it was like easy to see. After a while, you just gotta train your eye to catch order blocks. You see from this wick, there's no price. Price hasn't touched this entire area at all since it escaped. At all. Price hasn't touched. Look, price hasn't touched. Price hasn't touched. Price hasn't touched at all. No wicks, no anything. Because a wicks is just candles on the lower time frame. You understand that? So that means it did get touched. It never got touched until it finally came down here. Beautiful order block. Even if you got in off the first order block with a tight stop loss, you're in the money. Your stop loss would have never got hit because it still respected support. Game time, right? So that's basically what you're going to see. Market is going to be going down and then it's going to switch back up. It's going to change back into, in this case, a bullish trend with just a crazy green dildo candle. And usually that gap in price is going to be your order block. So those are 3 things that led up to that buy. And if you guys were watching on my last stream and the stream before that, this was the same playbook we did on a few trades. We played this on Useless. We played this on Uranus. We played this on Troll. Like, we played the same play and it was almost textbook, the same exact technical analysis. 78 levels, there was like order blocks in those same levels hitting on support. We took the stab at it, boom, we were in money in every single one. So those are things that you want to pay attention to. Now, tying it all together, that's it. That's what a top-down analysis is. Now, some people, they'll do all these indicators, moving averages, RSI, look for divergence, all those things. I don't go that hard with technicals on memes because the basics will do it for you. Understanding this at a high level and just repeating those patterns and seeing it over and over and over and over and over and over and over again is going to help you. Price action is all I play. I play price action. Where's price now and where's it going to go next with technical analysis? Indicators, they're all lagging. So it's like, you know, I like to be ahead of the trend, and really the only way to do that is understanding narratives, understanding catalysts. But technicals, the way that I'm showing you here, is all you need. This is game time. It's game time. You go from top down analysis, like I said, higher time frame always on higher market caps that ideally been out for 48 hours at least. That's where you're going to see enough data. Support resistance close to price. You're looking for those deep discounts. And then you're going to find entries on dips. Any call that you see, if you see a KOL sending a call out and you like to play, you're on crypto Twitter, you know, you're in these telegrams, you're in Rage Pro and we're sending banger after banger after banger. Don't go ahead and top blast any trade because sometimes we might call a banger and it's already up 5x by the time you see it. Don't go chasing the chart. Maybe we take profits, whatever. Some people take profits. Still strong narrative. In the next few hours and the next day or two, and it starts playing off of these levels that I'm showing you, you can still make money. Wait for the trade to come to you. Never chase these trades. And you do that with technical analysis. This is the most risk adverse thing that you can do. Just playing off of technicals, you will increase your win rate. Again, narrative and attention is primary in meme coins. As long as volume and community is growing, especially when you see it at those levels, usually, like, think of it like this. The community with Corey was bigger here at 15 mil market cap on this dip than here at 60 mil. That's a strong indication that this is still going to grow. Holder count went up here compared to here. Holder count didn't go down. That just shows you this thing's about to pop. This is going to explode. It's over. These are indicators that you want to look for in narratives and catalysts and understanding the ecos like I showed you, right? I saw Bonk all week was just underperforming a little too much. I was like, they're not going to go out sad like that. There's no way. Next thing you know, I didn't know how, but the thesis was thesising because it happened. Next thing you know, we got a Coinbase listing with Useless and now everything on Bonk is up again. Now we might have a little bit of hype. Let's see how it goes. But we were just playing off technicals with the narrative in mind. No, first is always going to be key. If PA breaks, then always look for a break even or small profit and then re-enter based on updated PA. PA means price action. So if your technical analysis or your price action, if your price action breaks, price action is just price, what's happening on the chart. So let's say, for example, it broke this level of support here. So our 78 retracement invalidated, order blocks invalidated, support levels invalidated, and maybe there was FUD or something like that and it broke. Maybe if we had a perfect entry here at 15 mil, I probably won't get out yet. Usually you guys know me for this, I won't even get scared, because usually, one, I don't risk more than what I'm willing to lose. But the right thing to do is, once it goes down, like, don't sell at a crazy loss. What's always going to happen is going to come back and it's going to retest. Get out on the retest, and sometimes the retest is a nice fake out retest, so it'll come up a lot, maybe even double top here and then drop again. That's what I'm waiting for, and then I'll just get out with small profit or whatever the case is, or break even. And then on the new floor, let's say the new floor is here, and if I still like it and everything adds up, then maybe I'll get in there. So you could always play your exits off of technicals as well, not just entries. You don't have to get super scared and just get out right there. Unless there's FUD. Maybe it's like, oh, the team abandoned the project, it's over, it was all fake, whatever the case is, which is highly unlikely when a coin's already been holding up at these levels for this amount of time, which is why, again, I teach higher market caps that's been holding versus new pairs. On a new pair trade, technicals could be perfect to the T. Mwah. You get into that mother sucker, you're in the trade, you have your support levels, and then boom, bundles out, the whole thing nukes. Boom, a better ticker comes out, PvP, the whole thing nukes. And now the new ticker's at 2, 3, 4, 5 million. Or maybe you was just in too early and it's just like, I mean, how long are you really gonna hold on to a brand new pair? So it's hard to have conviction that early. You can't be both confident and early. It literally, quite literally, has to be a gamble when you're trading new pairs. But when you're waiting and you're patient and you're letting the market cap come to you on these higher conviction plays, higher market cap, you can print more consistently. Guys, that's how you print. That's how you do technical analysis. That's how you do fibs, and that's how it all comes together. And basically, in real time, I mean, you guys can look at the scans. We've been talking about this back to back all week. And I went in depth into this, on why and the bonk equals, this whole thing in the inner circle as well. So it's just like free money. It's money on the floor. When you find these plays, look at it as a gift. You find higher market cap plays. A lot of people like, oh, it's too high. I'd rather trade 10K, 20K market cap shitters and hold for 10X or whatever the case is. You're exposing yourself to so much more risk that way. When these do the same damn thing, especially in these market conditions, it's not always like that. So you want to take advantage of these type of plays now while it's here. A few months ago, you couldn't hold shit for more than 48 hours. Liquidity is here. Markets are so back. Ethereum is at all-time highs. Solana looks like it's gearing up for all-time highs. Bitcoin is at all-time highs. Take advantage, because this all drips into memes, and all these higher market cap plays are going to be where you print the most. So gear up. Lock in, family. If you're trading, don't trade alone. We've been calling these plays back to back. We've been helping each other out in pro. Trade with a group in the alpha chats. We're sending back to back alpha. Everything's on meta. Everything's cooking. If you guys have questions, we'll hop on VC. We'll do whatever. It's lit. Get active. Be a part of the community. Don't just join the community. If you're gonna join, be a part of it. That's how you do technical analysis. That's a full master class. Let me know what you guys want to see more of, and I'll go ahead. I'll make some content curated around that. Join pro. Make sure you guys are executing, taking those trades on Axiom. You can use my link. It's going to give you double the rewards and higher cashback fees since I partnered with those guys. And let's run it up, family. I'm going to see you guys on the next stream and the next video. Appreciate y'all. Peace.